Hello again, everybody. Doing here from DRFX Forex and Trading. The Euro-Japanese yen attempted to break out from the large pennant setup on its daily chart with a bearish candlestick signal below the support boundary. Here you can see that the market provided us with a fairly strong bearish candle that attempted to continue or attempted to start a breakout in favor of the Japanese yen. However, as you can see from this pattern of candles here, a few days later, the market is now starting to move sideways. And based on what I'm seeing here, we could actually be in the early stages of the formation of a small consolidation setup that will eventually lead to a breakout, either bearish or bullish, back inside of the consolidation. So, in terms of the bearish scenario, this could actually be a setup that tests the broken boundary before continuing the breakout. As you will recall from several examples across the currency market, the market can break out initially with a candlestick signal to start a breakout from a consolidation, and follow this up by a pullback or a sideways movement that essentially tests the broken boundary to see if we're actually going to be headed back inside or if we're going to continue the breakout in the indicated direction. So this could be the setup, a small pennant setup that acts as a formation that tests this support boundary before providing us with a bearish signal to continue the breakout bearish. So that is a possibility on the bearish side. On the bullish side, given the fact that we're stalling at this area here, it opens up the possibility that we could actually see the market head back inside the consolidation, back to the resistance boundary, and perhaps even break out above the resistance to start a breakout bullish in favor of the euro. So that is a possibility that we should also take into consideration as probable, based on the stalling that is taking place at this area here. So once we see a strong setup and a strong signal, we could see the market head back inside instead of continuing bearish. So this could essentially be a false breakout reversal that takes place. And as you'll recall from several examples, false breakout reversals generally tend to be sharp and move pretty quickly. So if we're targeting a movement to this area here or just above, then that target would be hit fairly quickly, relative to a normal breakout that takes place in the initial direction. So those are the two possibilities that I'm seeing for this pair right now. Now, based on the size of this consolidation pattern that we're seeing on the daily chart, the daily chart is going to be the time frame that we're going to be using to provide us with a signal. This is opposed to the 4-hour chart, which generally is going to be used, or generally is obeyed or used when it comes to smaller consolidation setups. So for large consolidation setups such as this, we're gonna have to wait until the daily provides us with that signal in either direction. So based on that and based on the setup that we're seeing, the strategy is gonna be one of the strategies that we're gonna be using would be that of a movement within consolidation. So essentially, if we're seeing a bullish, if we see a bullish movement or bullish candle, or if this is expectation, then it essentially is going to be a movement back inside of consolidation. And the strategy that will be used would be the one based on the daily chart signal. So that a similar example would be the one that took place at this area here for the euro US dollar a few weeks ago. And the same principle is going to apply. Given the size of the consolidation, whenever we're talking about breakouts from consolidation or back inside or movement within consolidation, the larger the size of the consolidation, the more appropriate it is to use the signals on the daily chart. So once we see a signal that is strong enough and appropriate enough to take us back inside of that consolidation, then we would follow the steps associated with trading that type of setup, fill up the trade sheet, and leave the trade for the expected holding period for this type of trade. Naturally, as always, or similarly, if we see a bearish breakout instead, then the trade setup that we will use will be the one to trade normal breakouts from consolidation using the daily chart. So the similar setup would be followed, or similar steps would be followed. This strategy would involve trading the daily chart, trading the signals on the daily chart, and would be one of the five trading strategies that we use based on the daily chart. So again, we would follow the steps involved in trading this type of breakout using the daily chart, fill out the trade sheet, and then wait for the target to be hit. So that is the situation that I'm seeing on the day on this pair right now. So next couple of days, I believe that this formation is going to be formed by the end of the week, and by next week we should get a strong signal in either direction to trade. And as long as the setups and the signals that we see on the daily chart and the 4-hour chart conform to the trading strategies and the criteria for the trading strategies, then we could get a profitable breakout and a profitable trade in either direction. So until then, take care.